If you've been following my channel, perhaps you've seen my mini-series about executing a wheel strategy as a method of generating income. Now in that series, I used shares of Rocket Company as the underlying stock for this wheel. Well, about 3 weeks ago, I published an update, part 3, to share my experience along this journey. And in that video, I shared how the stock price dipped almost 20%, and I ended up getting assigned the shares. So after this happened, I've been planning and strategizing how to turn this trade around and make it profitable. But is that even possible? I don't know. Well, it's time for another update, part 4, where I'm going to share my long, slow climb out of this hole. In case you haven't seen my earlier episodes, let me present you with a recap from episode 3. On May 3rd, 2021, I had sold a cash secure put option contract for symbol RKT. It had an expiration date of May 7th of 2021 with a strike price of $21.50. Well, on May 7th, 2021, the expiration date, the share price of symbol RKT had dropped below my strike price, and so as a result, I was assigned the share. So from here you can see that the cash that was reserved for my collateral, the $2,150, was actually used to pay for the shares that got assigned to me. So now the cash reserve for collateral goes to 0. The number of shares I own is now 100. These are the 100 shares that were assigned to me. And they're also made available for me to use for whatever purpose I want. So I can sell them directly, or I could use them as part of a covered call option contract. So that gets you up to speed and lets you know where I'm currently at. I have $59 in my trading account. I also currently own 100 shares of stock symbol RKT with a cost basis of $20.91 per share. Since that time, I've held on to the shares of Rocket Companies and decided to let the share price recover from the quick sell-off. I'd noticed that when the price started to dip, the market panicked and shares of symbol RKT were sold off in a frenzy, which led to the oversold condition. At that point, I was thinking that the market would eventually recognize how inexpensive the shares were, and that would initiate a demand that would drive the price back up, or at least that's what I was hoping and betting on. As you can see from the chart, the stock price has been steadily climbing upwards this week, from a low of around $17 up to where it closed today at $20.27 per share. With the stock climbing and the share price up over 13% today, I decided today was the perfect day to sell a covered call option contract. Here's the option chain for stock symbol RKT, and I picked the expiration date of June 18th of 2021. So I'm looking at a strike price of $22.50, which is currently paying a premium of 33 cents per share. Next, let's run through the numbers for me selling a covered call using these shares. So I'm going to be selling a covered call using the 100 shares of stock symbol RKT that I currently own. Now, the market price closed today at $20.27 per share. I do have 100 shares, so that's enough for one contract. So the value of my shares right now in the open market is $2,027. Now, for this covered call option contract, I selected an expiration date of June 18th of 2021, giving this contract a duration of 16 days. Now, I picked the strike price of $22.50, which is at the time currently paying a premium of 33 cents per share. Now, remember that my cost basis per share was $20.91. So if I do end up selling these shares and my option contract does get exercised, I'll receive $22.50 per share. So from the price appreciation, that's $1.59. So that's $22.50 minus the cost basis of $20.91. And for selling this option contract, I'll receive $33 in premium, and that's mine to keep no matter what the disposition of this contract. So if the contract gets exercised, I keep the $33, or if the option contract expires worthless, I still keep the $33, my premium. Now, best case, I would receive the stock price appreciation of $1.59 per share plus the premium. My total max profit would be $192. Next, let's take a look at some of the possible outcomes. So outcome number 1 is where my option contract gets exercised. And so this would happen if the market price exceeds my strike price, right? So it's above my strike price, and so the option contract would get exercised. And so my profit from the price appreciation would be $1.59 per share times the 100 shares, so that's $159. And then my gains from the premium payment would be 33 cents per share times the 100 shares, $33. So again, my max profit would be $192. And from a percentage standpoint, that's 9.18%. Now let's look at outcome number 2, and this is where the option contract expires worthless. So if the market price is below my strike price on the expiration date, then this option contract would expire worthless. And so from that standpoint, what do I stand to gain? Well, my profit from stock price appreciation is 0, right? So I end up keeping my shares, so no one purchases my shares, and so there's actually no appreciation from the stock price gain. But I do gain from the premium payment. I still get to keep that. That's 33 cents per share times 100 shares. And so my total profit then is $33. And that $33 represents a 1.58% gain. If you like the information that I've shared in this video, then do me a huge favor and smash the like button. It helps out the YouTube algorithm, and it provides the opportunity for other people to see this video as well. Now it's time for me to update my worksheet with the latest information from this last transaction. So on June 2nd, 2021, for stock symbol RKT, I sold a covered call option contract that had an expiration date of June 18th of 2021, making the length of the contract 16 days. Now I had picked a strike price of $22.50, and for that I received a premium of 33 cents per share. So the total premium I received was $33. Now let's go ahead and update the account balance by adding the $33, which takes my new account balance to $92. Now I still am the owner of the 100 shares, so that hasn't changed. But if you'll notice, I now have 100 shares reserved as my collateral, and that's to cover the covered call. And because those shares are reserved, I no longer have them available. And because I did receive $33 in premium, or 33 cents per share, my new cost basis is now $20.58 per share. So remember that Rocket closed at $20.27 per share today. My cost basis is $20.58 per share, so I'm still a little bit under the water. But as you can see, I've recovered quite a bit from that 20% dip from earlier. But if the market price closes above my strike price on the expiration date, that means my option contract will get exercised. I'll receive $22.50 per share, which means I'll make a max profit of 9.18% off of this deal. But if this option contract expires worthless, let's say the market price closes below my strike price on the expiration date, that's okay too, because I'll still walk away with a profit of 1.58%. And then of course my next step, you know what that's going to be? I'm going to end up selling another covered call using these same exact shares and collecting even more premium. If you're interested in finding out what happens next, be sure to watch my channel for the next update, episode 5. Will I be able to finally turn this negative trade into a positive profit? Or will my account get crushed from the volatile market conditions and send me into an even deeper hole? If you like the information about my stock picks, then consider joining my Patreon, where I share exclusive videos of my stock picks every week that I'm going to be using for profitable trades. I also include my research notes, stock analysis, and trading strategies for every stock I pick to watch for that week. And of course, all my videos posted on my Patreon are ad-free. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.